Hello, everyone. My name is Brendon, and today I'm going to talk to you about the Bitcoin yield flywheel and the core blockchain. Has anyone here heard of a flywheel before? Hands up. Not a single person? Okay. Well, a few people. These were on the pitch decks of every tech bro over the last 20 years. But they were also the catalyst to some of the best businesses ever built in technology. To describe a flywheel, let me just start with the example of Uber. You guys have probably seen this diagram before, but when they launched in new markets, they initially got an initial set of drivers. And the more drivers that they added to the network meant lower wait times, lower fares for riders, which increased usage of the platform by riders because the experience was better. Drivers then earned more money, which led to more drivers trying to access those economic opportunities and join the platform. And the flywheel continued. And this was the big catalyst to a lot of their growth in these new markets. Crypto, though, where there's been a lot of talks today, has very different flywheel dynamics. I'll touch on a few today. One of the most popular flywheels in crypto is obviously demand, traditionally for a token of some kind. So you have some sort of utility, and then a hard-capped supply, right? A very limited supply. And those two work together in tandem to really have some growth effects for a network. So one example that is built on top of one of the best assets, Bitcoin, which we'll talk a lot today, is MicroStrategy. They've probably made one of the biggest bets and one of the biggest flywheels that we've seen. They acquired Bitcoin. As the price has gone up, investor confidence in their balance sheet has very much increased. They're able to issue bonds. They go and buy more Bitcoin or borrow against their existing holdings and acquire more Bitcoin. This constrains the supply. Obviously, we know what happens when you have a very fixed amount of an asset and you're buying a ton of it. Price goes up and the cycle and flywheel continues. And this strategy is really only possible with Bitcoin for a variety of different reasons. The one that's most important is its absolute scarcity, right? Which Bitcoiners talk about a lot. It has a total hard cap supply of 21 million Bitcoin, and there are fixed block rewards that are immutable. So in this example, if you're Michael Saylor buying some sort of other commodity or asset, let's say gold, there is a fixed supply of gold. But as demand increases, miners could produce more gold to meet the growing demand. With Bitcoin, this is simply not possible. Hence why this flywheel works very, very well. So as we've established, Bitcoin is the cornerstone of many crypto flywheels. And at Core, we're looking to unlock Bitcoin's potential by attaching to this flywheel and expanding on it with some of our own. Before I jump into the specifics of this, and Core, I just want to introduce myself. So my name is Brendon. I'm one of the initial contributors at Core, and I head up Core Ventures, where we invest in cutting-edge Bitcoin projects. Previously, I was the founder CEO of Joist, which was bought by a group backed by Silver Lake and taken on the NASDAQ in 2020. So I've spent 15 years in tech. I've seen many flywheels, and I've had a front row seat to some of the best businesses built over the last couple decades. So let's talk about Core. When we talk about Core, we call it the Bitcoin everything chain. On one side, we're a leading layer 1 EVM compatible blockchain with 100 plus Bitcoin specific DeFi apps where you can put your DeFi on chain with over 1 million weekly active users today. On the other side, we have a Bitcoin yield product where Bitcoin holders can stake Bitcoin to help secure the core blockchain in return for transaction fees and block rewards, with over 500 million securing the core blockchain already today. And the core token, which is the token of the core blockchain, is your key to unlocking higher Bitcoin yields, which we're going to jump into shortly. And secondly, your key to unlock Bitcoin DeFi as the key, the core token to the chain itself to access all of these dApps. So we at Core, we're on a mission of expanding Bitcoin's utility over time. We envision a world where Bitcoin is doing a lot more and is another financial system and not just something that's held in wallets. And we see it as a multi-step strategy over time that we're going to execute on. Right now, though, we need to meet Bitcoiners where they're at. Most Bitcoiners today are holding Bitcoin in cold storage. But the opportunity now is a lot of folks are looking for sustainable yields for Bitcoin and turning it into a productive asset. There's then going to be sophisticated strategies, tokenized products built on top of this yield, which is happening for the first time ever in Bitcoin. And then long term, we see an entire DeFi economy on Core where folks can put their Bitcoin to work and use their Bitcoin in DeFi. So let's talk about our first flywheel, which I just touched on briefly. So we have this leading core blockchain and DeFi platform with 100 plus DeFi apps. As there's more usage on the platform, that produces fees for Bitcoin stakers and increases yields for folks securing the blockchain with their Bitcoin. With this yield, that attracts more Bitcoin to the network and adds to the security budget, and the flywheel continues. So let's talk about Bitcoin staking, or sometimes we like to call it time locking. We were the first to launch this over a year and a half ago. And what's great about this strategy and the way that it's been implemented is it happens entirely on Bitcoin. So you don't need to wrap your Bitcoin, bridge, or give up custody of your Bitcoin in any way, and there's no slashing risk. What you do is using check time lock verify or hash time locks, which is the technology underpinning the Lightning Network. You time lock your Bitcoin for a specific period of time with your favorite Bitcoin wallet. And you can think of it as you're delegating your Bitcoin to a validator on Core to help them get elected into the set. For contributing to our security budget, you earn Core block rewards. And I should mention there's no slashing risk, and the Bitcoin always stays under your own private key. And these are real yields. This isn't a points program or some blockchain with really front-weighted rewards that are juicing rewards and not sustainable. We are Bitcoiners at heart, and we're very influenced by Bitcoin's hard cap 21 million supply, and therefore have a 2.1 billion fixed hard cap supply and a very long 81-year mission period that's meant to be very sustainable over time. You also earn a percentage of gas fees that are created on the chain. So these are live tokens. The project, we launched Core in January 2023 and fair launched. So we talked about Bitcoin staking, and that's one key piece of our consensus. We also have the chain secured by Bitcoin miners who delegate hash rate to the network today. And also, I mentioned the Core token. If you have the Core token, you can stake that as well to earn a percentage of block rewards. These three components make up our consensus. Each day, validators are elected based on how much Bitcoin, mining hash, and Core they have. And the top 31 validators are elected each and every single day. And this budget has continued to grow. So right now we have about 3/4 of Bitcoin blocks helping secure the blockchain. So if you look at the mempool, you'll see metadata pointing to the Core blockchain to help secure it. We have over 500 million Bitcoin staked in the network and about 235 million Core staked as well, contributing to this validator set. So we talked about Bitcoin staking. If you also stake two of those three components that I just talked about, so if you stake Bitcoin and Core, you earn much higher yields. You actually get to multiply your yields on the platform. So this is kind of contributes to our first flywheel. And we basically reserve these highest yields for dual stakers, for Bitcoiners that are really aligning with the Core blockchain and also staking Core. And we target that at about 5% in the highest bucket for the most Core-aligned Bitcoin stakers. And you might be asking, how is that sustainable over time? We have basically a protocol mechanism that can shift this Core to Bitcoin ratio for the dual staking buckets. If we want to incentivize more and bring more Core into the bucket, we lower the ratio gets lowered. If there's too much Bitcoin in the top bucket, the ratio goes up, and that attracts more Bitcoin into the top bucket. And we're always targeting about a 5% yield for the most Core-aligned Bitcoin stakers in that top bucket. So this is 5% real yield for staking your Bitcoin. And in practice, this has worked really well. So earlier this year, there were a lot of Bitcoin stakers in the highest bucket. And the protocol made a change to increase the ratio, get the target yields back to 5%. You'll notice that there was initially a little bit of a Bitcoin drop-off, but it quickly came back and actually exceeded the Bitcoin rate before. And you'll notice that a lot of additional core was staked, pulled out of the market, and taken out of circulating supply. Which leads me to our Bitcoin yield flywheel. And this is how the mechanics work. Bitcoin holders today want real yield that's sustainable. They acquire core to get their max yields and get access to this highest tier bucket. The circulating supply of core shrinks, making the core token become a lot more scarce. And this in turn increases yield because we have a very fixed circulating supply that can't be changed and is immutable. And demand for Bitcoin yield grows because the yield is sustainable, high above 5%, and more Bitcoin then comes to the network, and the flywheel continues. So this has been very interesting and successful base level so far. A lot of institutions are interested. We'll talk about some of those use cases. A lot of builders are also building on top of this flywheel. Most importantly and notably is Maple Finance, who's also here and talked a bit about their product, LST BTC. So what they've done is they've tokenized this flywheel. They have obviously very deep lending expertise. You can deposit Bitcoin. They will then take out a very low LTV loan, buy the core supply in the market, manage the dual stake, and pay out a 5% yield in Bitcoin. And what this does is they're also going to mint the LST BTC token shortly, which means you'll have a rebasing Bitcoin token that's paying real yield on-chain. So this is secured by BitGo and Copper. It's basically an institutionally focused product with them being the minting partners. It's in a beta right now, so about 1,300 Bitcoin are already staked and earning 5%. And we're very excited about a lot of these use cases and bringing this token cross-chain over time. And what this LST does is, folks can simply hold it in a custody account and earn their Bitcoin yield and see their LST Bitcoin rebase. But institutions can also come on chain, or retail users, and earn additional yields. Think about what you can do in a lending market with a Bitcoin derivative that's earning interest in Bitcoin. Think about how some of the economics change and what you can do and stacking those yields. And this more than offsets negative carry. Historically, it's actually cost people, at least cost institutions to hold Bitcoin in custody. There's typically a custody fee. Not only does the base yield cover that, but if you come on chain, you're well above that hurdle rate, which has been an impediment for folks to do things with their Bitcoin for a long time. So this LST Bitcoin, as we mentioned, benefits both DeFi and TradFi users. We talk about it in terms of use cases for Main Street and Wall Street, and really see this yield flywheel as a starting point for a ton of exciting Bitcoin yield products, right? We talked about the LST, which opens a bunch of great sustainable and also degen opportunities on chain. You have public treasuries that are looking to monetize and put their Bitcoin treasuries to work. We already talked about miners who are delegating hash rate, earning core. They're now deciding to just stake it and monetize their Bitcoin balance sheets, which has been awesome to see. And then we also see this yield underpinning ETFs and ETPs and other structured products in the future. Notably, we already have a yield-bearing ETP in Europe that's powered by Core's sustainable yield. That's super exciting. But let's talk about treasury companies. Kind of opened with this, and it's been one of the most interesting narratives of the year so far. It seems like one of these companies is popping up every 2 weeks, and there will be homegrown winners all across the world. They're trying to replicate the MicroStrategy strategy, but at the end of the day, they're way behind and need to differentiate. Core tokens give them the ability to access this premium yield and differentiate from their peers. And super excited about some of the conversations that are already happening there. So we talked a lot about the staking flywheel, right? How to put your Bitcoin to work and reserve and get access to these premium yields on your Bitcoin without any risk. But let's talk about the leading DeFi platform, which also provides a ton of utility and demand for the Core token itself. So Core today is the home of Bitcoin DeFi. That's our mission. We have over 125 key Bitcoin apps, from lending dexes to CDP protocols, to perps exchanges, to Sharia law compliant yield protocols for Bitcoin. And there are a ton of sustainable Bitcoin yields on chain. And we see this growing a lot over time. And what's great about this is although the project is only 2.5 years into its journey, we're well ahead in many of the categories and setting ourselves as the leader for Bitcoin sidechains and L2s. In terms of unique addresses, transactions, builders, etc., the momentum is very strong. And why is this important? Because the more on-chain activity there is on Core, the more yields are passed on to Bitcoin stakers, right? We already talked about these block rewards that come from the Core platform, but as the blockchain itself is used, they're producing fees, which then go to stakers and increase yields. The other piece is you need to go get the Core token, right? You need to do that to access these great BTCFi dApps. You needed to work with our Core Toshis. We have some team members here working hard on that. You need your Core tokens to do that. And that, again, is a big suck and pull for the Core token. So in summary, Core unlocks both premium Bitcoin yields and Bitcoin utility. First, with its trustless Bitcoin yield, by having Core, you get access to premium yields, whether you're an institution or a retail-focused user. And then for Bitcoin DeFi, you need the Core token to access these dApps and access this functionality. And if you'd like to learn more, please go to coredao.org. We're super active on Twitter and Discord if you want to get involved. If you're an institution or Bitcoin treasury company, we're happy to talk about some of these products and possibilities that we're opening up with this sustainable yield flywheel. Thank you very much. Appreciate the time. Thank you.